Okay, I'm now recording and sharing my screen. Can you see my screen? What do you guys see?
The
Yep, I
McKendree
do.
site.
Okay. Okay, good. All right. All right. So tonight is the night that the midterm is due and quiz, obviously. So hopefully everybody has worked through that, and I know most of you have, and I know there have been some questions as to various questions that came up on the midterm. And one of the key points that I want to make is that when you're taking these tests and taking the quizzes, that you really, really, really have to read the question and pay attention to the details. Okay? One word can throw it off completely. I know I had like 3 people ask me a question on one where it said something about current assets on the income statement, and current assets is a balance sheet item. So that instantly made that question false, right? So it's just stuff like that you've got to pay attention to. Um, I know that sometimes we go through it and we just start reading, and I'm just as guilty as you guys, of reading and looking for the answer and just not thinking about the placement of where some of these accounts go. And I know that's one of the things that students struggle with the most in accounting is placement of where these accounts go. So you always have to remember assets, liabilities, stockholders' equity is balance sheet. So anything that goes up under those goes on the balance sheet. Revenue or sales, whatever it's called, and expenses go on the income statement. So if it's something that happens to fall into those buckets, then that goes on the income statement. So just kind of keep those things in mind and really focus on when you're reading, what is the question really asking you and where is this located? It kind of helps me to put it visually into, a financial statement so that I can see it. So that's what you have to get good at, and that's what you really have to practice at, and that's one of the key components to financial accounting is understanding the various financial statements and where everything goes on them, and then how they kind of fit together and interact. Okay. As you know, by the other webinar that I have, I give everybody the opportunity to correct their midterm, okay, to earn back half their points. Now, this is an exercise in which you have to do a couple of things to earn back your extra points. A, it has to be done in Excel. B, you have to tell me what you did wrong. Okay, so you have to first understand where you went wrong on the problems that you missed. And then C, you have to tell me how to do it correctly. And not just show me the problem, but in words, why you're doing it the way you're doing it and why that is the correct way. Okay? So I know that a lot of people are still kind of fearful of Excel and stuff, but I want it done in Excel. And basically what I want you to do is I want you to go into the midterm, and obviously you have the correct answer. It tells you the correct answer now. So it's your responsibility to figure out how to get to that correct answer. Okay? And figure out what you missed, why you missed it, write that down, and then tell me how to do it correctly in words. Okay? So in order to earn your points back, I need all of that in one Excel document, just like you do your homework on one sheet, okay, just going down. And if you give me that, and it will be due a week from today, so Tuesday by midnight, okay, If you give me that and you do that, I will give you the opportunity to earn half of the points that you missed back. So if a question was worth 20 points and you missed it, you can earn back 10 by doing your corrections. Okay? So for some people, that's going to vastly improve their grade. For others that didn't miss very much, not so much. But I can tell you this, there is a huge benefit to this in that every class that I've done this with has told me that that was one of the most helpful things that an instructor did, because it made them consider what they did wrong and how they could do it right. And again, accounting is a class that you build on. You build on your prior knowledge. Okay? So it's not like you're not going to have to know this stuff on the final. You will. You'll have to understand where everything goes and why it goes where and how to calculate things, because it's only going to continue to build to get to the final. So it's in your best interest to actually go through this exercise and do it if you want to make a decent grade on the final. Okay? So I emphasize that to you. I hope that everybody takes me up on that offer. I am more than happy to go back and take a look at your submissions and then see if you're still having any issues understanding and giving you partial credit back. Okay? One other opportunity is that you can write a paper. Okay? And the paper will be worth 50 points. It has to be an APA style. Okay, so you have to have, your title page and things like that, and it has to have in-text citations. So for your paper, it needs to be about 500 words, and it needs to have at least 2 citations that are not something like Wikipedia. Okay? Wikipedia is not a good citation. It's not a scholarly source. I want you to use scholarly research. Okay? So journal articles. Okay? Don't use Forbes or someplace like that. Those are opinion articles. They have no real knowledge value in the world of research. Okay? So I want you to do your papers, if you're going to do them, 500 words, on the differences between IFRS and GAAP. So IFRS is the International Financial Regulation Standards, okay, and GAAP, Generally Accepted Accounting Principles. So we use GAAP here in the United States. However, the rest of the world uses IFRS, okay? And IFRS is pretty much the standard for all companies that deal internationally. So at some point, you could have to know, especially if you're going to be in accounting, you will have to know the difference between IFRS and GAAP, differences between IFRS and GAAP, and you'll have to understand how to maneuver both of them and translate those between systems. So this is, again, another highly beneficial exercise for you to go through. Okay, it is something that you will encounter and you will need to know in any accounting type position. Okay, it is also something that is very good for you to know in terms of, if you're in another position like even HR or something like that, because I will tell you SOX compliance, which is a whole nother issue, will come up as part of the GAAP requirements of generally accepted accounting principles. You will have to be, as a company, if you're public, SOX compliant. Private companies don't necessarily have to abide by it. Public companies do. And it's a big issue. It's a very expensive issue. But it's something that ever since, the companies like Enron and Arthur Andersen. You know, they're basically the reason that we have to comply, you know, be SOX compliant. And, you know, another reason why there's, you know, GAAP was really ramped up, okay? It's because we had companies that were basically cheating the system and cheating their investors. So it's a very interesting topic. It's interesting to see the differences. I know them because I deal with them every day, but I want you to research it and write a paper on it if you want 50 points of extra credit. The way that works is I add 50 points onto your midterm exam. Okay? So those are your two opportunities. It doesn't matter if, you know, you got a 350 on it and you want the 50 points extra credit, I can put it up to 400. That's not an issue. And I will tell you it helps because you won't have that opportunity on the final. So, you know, do your math, think ahead, think about how that could be, you know, impactful to your final grade. I want your papers, if you're going to do them, the midterm or the extra credit papers, I want those turned in by Sunday, October 9th at 11:59 p.m. Okay? And again, both of these extra credit opportunities, there are no late submissions on. So either you turn them in or you don't. Okay? So this is one of those, it's up to you. You don't have to do it. You can accept your grade as it is, but I highly encourage you to take advantage of both of them because both of them are excellent learning opportunities as well. Do you guys have any questions on that so far?
Nope.
Okay.
I don't have any either.
Okay. All right, good. All right. Let's see. One of the questions that someone had about Chapter 7, it discusses how to estimate bad debt. And the question that was asked was, what if it's a brand new company and there's nothing really to estimate bad debt from? Do you just make a number up, or do you wait until it actually happens? Okay, so the answer to that is no. You don't just make a number up and you don't wait until it actually happens. Typically, companies will use like a certain percentage of their revenue and estimate that as bad debt. Some companies use 1%, some companies use 2%. Obviously, you can, depending on the industry that you're in, and depending on, you know, the reliability of your customers to pay their debts, will depend on what your bad debt is. I will tell you from all of the different industries that I've worked in, healthcare has one of the higher rates of bad debt, simply because the insurance pays, but the patient doesn't always pay. So typically we used like 3% of revenue to calculate our bad debt. So it's always basically a percent of revenue, okay? And there's different methods of calculating it. Some will just do a flat 3% of revenue. Some will do 1% of revenue. Some will do, the first million is 3%, second million is 2%, third million is 1%. So there's stages or phases to it, and you'll see that in the problems. So the answer to the question is you need to take at least 1% of revenue and make it bad debt. So, just think about that when you're going through it. Most of the time, the problems are going to tell you what they want you to use. And again, it does vary by industry in the real world. Like, for instance, the company that I work for now, we only probably use 1% because most everybody pays us, and there's really no you know, in software consulting, there's really very little bad debt simply because, you know, either you pay for the consulting up front or you don't get the consulting. So, you know, it's one of those, you know, it really depends on the industry that you're working with. Like I said, healthcare, much higher percentage. Okay. Does that make sense? Okay. Another question I had was a question on the midterm, which obviously I can't answer those right now because we still have a little bit of time left on the midterm, but I will promise to answer those questions next week on our webinar, and you know, we'll go over any midterm questions that come up. Okay. Let's see. I think that those were the only questions that I had that weren't midterm related. Did you guys have any other questions?
Are we talking as far as the chapters?
I'm sorry?
Are we talking about the chapters?
Anything. Any questions?
I'm having trouble setting up Chapter 8, Problem 8-1A.
Okay. 8-1A. Are you sure?
And I just may be reading into it too much.
Okay, so the allowance method. Okay. So basically, it's just, you're just going to write out words. Okay. So your AR, your accounts receivable at the end of 2014 is 21,900, right? And then bad debt expense is 1.2%. So you've got that times the sales.
Where are you getting the one? Did you say 122?
1.2%. So let's take a look. Hang on. Let me get the book open. It's 8. These problems say dash. Okay. All right. So basically, you know, it's talking about the allowance method, which has been in business, blah, 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 for all these years. Firms credit sales and collections from customers and write-offs of uncollectible accounts for a 3-year period are summarized, right? So basically what you're going to do, so for A, it says if Fullerton had used the allowance method of recognizing credit losses and had provided for such losses at the rate of 1.2% of credit sales, what amounts in accounts receivable and the allowance for doubtful accounts would appear on the firm's balance sheet at the end of 2014. So the way you're going to solve this is you're going to add up the sales, okay? So that would be 685. Yep. So you're going to add up these 3 sale amounts right here, okay? See that? And you're going to multiply that by this 1.2%. Okay?
Oh, add them up first because I did it each individual one.
No, I would just add them up. You can
Okay.
put each individual line, but I would add them up because you're going to have to add them anyway. Okay, so the allowance for doubtful accounts at the end of 2012 is going to be the amount that you get of all of this added together, okay, times that 1.2% minus the total amount written off. Or
For 2020.
2014, I'm sorry. I said 12. 2014. So you're going to add up all the sales, you're going to add up all the accounts written off, and what you're going to do is you're going to take that the total of this times the 1.2%. That's going
Right.
to give you a number, and then you're going to add up all of these and take whatever number you got down here by multiplying that minus the total of this number, and that's going to give you your allowance for doubtful accounts at the end of 2014.
Okay.
Okay?
Got it.
And then it asks you to comment on the use of the 1.2% rate to provide for credit losses. And basically what it amounts to is the rate too high or too low? What would be the correct percent? And so basically it's asking you to analyze whether or not they're using the correct rate.
Okay.
Okay?
Got it. Thanks.
No problem. Any other questions? Okay. Well, if you have any other questions, again, don't hesitate to ask. Okay?
I got a question.
Sure.
On the practice questions,
Mm-hmm.
on 381A, Part B, I understand how they did it now, but when I look through the book, back at the book, it doesn't say exactly, how to do that. So I'm wondering, is this something that's taken from the previous chapters?
Which problem is it again?
It's E8-1A, Part B of the question.
Let me find that one. Show how many accounts received. This one? No, that's A. Sorry.
Yeah, 1A. Yeah,
Okay.
the Part B of the question.
Right.
I see how you came up with the answer and everything like that, but when looking back in the chapter itself, it doesn't really come out and say it how you got it. So I'm wondering, is this one of those things that is building on from previous chapters?
So yeah, you've got to go back and get the accounts receivable, which is 150,000 as noted by this, right? And
Mm-hmm.
you're going to subtract the allowance for doubtful accounts. So you basically have to be able to calculate that allowance for doubtful accounts. Okay, it estimates credit losses at 1% of credit sales, which were 900,000. Okay,
Mm-hmm.
during December, and the accounts receivable. And it says the allowance for doubtful accounts had a credit balance of 10,200 before the adjustment. So what you're doing is that 1%, you're going to multiply it by that 900,000, which is 9,000, right?
Yep.
And you're adding that to this 10,200 because there was already a balance in there as well. So you're going to take the 9,000 plus the 10,200, which gives you 19,200, right? And
Yeah.
you're going to subtract that out of this accounts receivable, which then gives you the 13800. So I get what you're saying. It doesn't really address it in the book. You kind of have to take the information and say, okay, I know that I've got to be able to calculate, what the credit losses would be, right? And I'm going to have to add that to what's already on the existing balance sheet. So it is asking you to say, okay, my prior knowledge, is when I have a balance sheet item and I'm going to add more to it, that's obviously going to increase that balance. Does that make sense?
Okay. Yep. Yep.
Okay, great questions. Do you guys have any other ones?
Well, I got.
Jeff? Good? All right. All right, guys. Well, let me know if you have any other questions, and if you do, I'm always here. I'm always happy to answer them. So, again, we'll go over the midterm questions that came through, obviously, next week after the midterm has been turned in and everything graded. So, sound okay?
Yep.
Sounds good.
All right. You guys have a great week, and I'll be talking to you soon.
Thanks.
All right.
Good night.
Bye-bye.